Buckle up, everyone, because today we were diving headfirst into a topic that's, well, let's just say it's probably got a lot of you feeling a little uneasy right now.
Yeah, no kidding.
We're talking about the Indian stock market and specifically what went down on January 13th, 2025.
Not a great day, huh?
You could say that again. The Sensex plummeted over 1,048 points.
Oof.
That's a hefty 1.36% drop. And the Nifty, well, it wasn't spared either, dropping 345 points or 1.47%.
Not exactly the kind of news that makes investors want to do a celebratory dance.
Nope, definitely not.
Yeah.
So the big question on everyone's mind is what exactly triggered this market free fall? And more importantly, what does it all mean for you and your hard-earned investments?
That's where I come in, hopefully.
Yeah, you're our guide through this financial jungle today. Now, I was reading through some reports, and one phrase that really jumped out at me was bear's tighten grip.
Yeah, I saw that too.
Sounds a bit ominous, doesn't it? What exactly does that mean?
Yeah. Well, it's definitely one way to paint a picture of the situation. In the world of finance, we use these terms bulls and bears to describe the overall mood of the market. Bulls are the optimists. They're expecting the market to charge ahead, like, well, a bull.
Makes sense.
Bears, on the other hand, are the pessimists. They're anticipating a downturn. So when they say bears tighten grip, it basically means the pessimists are running the show right now. They're selling off stocks, which drives the prices down.
And I imagine that kind of fear can be contagious.
Absolutely. One investor's panic can quickly snowball into a wider market sell-off.
Right, like a domino effect.
Yeah.
Now, the article also mentioned that this wasn't just a one-off bad day. This was the fourth consecutive day of losses for both the Sensex and Nifty.
Yeah, that's definitely a red flag that signals something bigger might be going on.
Exactly. 4 days in a row. They can't just be a few nervous investors, right?
Right. It's unlikely to be just a random blip on the radar at that point.
So what else could be contributing to this extended slump?
Well, there are always multiple factors at play. Global trends, economic data, even those unexpected geopolitical events that seem to come out of nowhere. For example, the article mentioned that crude oil prices have surged to a 3-month high.
Oh, yeah, I saw that.
And that kind of surge, it can trigger a chain reaction across industries. Everything from transportation costs to manufacturing expenses all get hit pretty hard.
And that trickles down to the consumer eventually.
Exactly. It can create this ripple effect that's felt throughout the economy.
Speaking of ripple effects, one number in the article really made my jaw drop. It said that investor wealth eroded by approximately Rs 12.39 lakh crore in a single day.
Yeah, that's a staggering amount.
It's hard to even wrap your head around a figure that big. I mean, that's like everyone in Mumbai suddenly losing a significant portion of their savings.
It's definitely a headline-grabbing number. And, it refers to the decrease in market capitalization, which is basically the total value of all the listed companies.
Right.
So a drop that massive, it definitely indicates a lack of confidence among investors. And, that can have potential implications for the broader economy as well.
So should we be hitting the panic button yet? Or?
Well, the market is cyclical. It always has been. It's important to remember that it's bounced back from similar downturns in the past.
Okay, that does offer a sliver of hope, I guess.
Exactly.
But the article also pointed out that every single sectoral index ended the day in the red, with realty taking a particularly brutal hit, down 6.7%.
Ouch. Yeah, that's a significant drop.
Oil and gas power, PSU, metal media, none of them were spared. What's going on there?
It's true. No sector emerged unscathed this time. But realty, that's a sector that's especially sensitive to fluctuations in interest rates and the overall health of the economy.
Right.
So this sharp decline could be a sign that investors are concerned about rising interest rates and the potential for an economic slowdown in India.
Interesting. Now, what about the Nifty, Midcap, and Smallcap indices? The article said they experienced their biggest falls since June 2024 for Midcap and 5 months for Smallcap.
Yeah. Those smaller companies, they're often seen as offering higher growth potential, but they also come with more risk.
Right. Higher risk, higher reward.
Exactly. And their steep decline could be a signal that investors are getting a little more risk averse. They might be shifting their money into more stable assets.
Playing it safe for now. Makes sense.
Yeah.
So if we break down the main culprits behind this market downturn that the article highlighted, we see some familiar faces selling across all sectors. Those surging crude oil prices, weakness in global markets, and investors dialing back their expectations for U.S. rate cuts in 2025.
Sounds about right.
Let's unpack these one by one, starting with crude oil. Why does the price of oil have such a dramatic impact on the market?
Well, crude oil, it's like the fuel that powers a lot of industries. When those prices go up, costs increase across the board. It squeezes profit margins and can ultimately lead to that dreaded word inflation.
Right.
And investors hate inflation because it eats away at the value of their investments.
So it's this chain reaction that can really throw the market off balance.
Right.
Now, what about the whole weak global markets thing? How does what happens in other parts of the world affect us here in India?
We live in a globalized world. It's more interconnected than ever before. So what happens in the US or Europe can definitely have ripple effects that reach India.
Right.
If there are worries about a global economic slowdown, investors tend to pull back from riskier assets, like emerging markets.
To protect their investment.
Exactly. They look for safer havens, and that can put downward pressure on markets like India's.
It's all connected.
Yeah.
And finally, let's talk about those U.S. rate cuts. What do they mean, and why should we in India be paying attention?
So interest rates, which are set by central banks like the U.S. Federal Reserve, they play a huge role in the flow of capital around the world. When investors believe that U.S. rate cuts are less likely, it makes U.S. assets more appealing compared to emerging markets.
I see.
And this can trigger capital outflow from countries like India, which puts additional strain on our stock market.
So it's like a global tug of war for investment dollars. Well, it's been a roller coaster of a day for the Indian stock market, that's for sure. A lot of factors contributed to this decline, and I have to admit, it's got me feeling a bit cautious.
It's understandable to feel that way, especially when you see those headlines and your portfolio takes a hit.
Yeah, it's hard not to feel a little bit of panic.
Absolutely. But it's important to remember that these short-term fluctuations, they're a normal part of the stock market cycle. Don't let fear drive you to make impulsive decisions.
So what's your advice for our listeners who are probably glued to their phones right now, checking their stocks with a knot in their stomach?
Instead of giving in to that panic, why not use this as an opportunity to learn and to understand the market better? Take a look at historical market trends. See how the market has recovered from past downturns.
Right.
And think about your own investment goals and your risk tolerance. Are your investments aligned with your long-term vision?
That's a good point.
This might even be a good time to consider diversifying your portfolio, spreading your risk across different asset classes.
Solid advice. Thank you so much for helping us break down this market mayhem and for giving our listeners some much-needed perspective.
My pleasure.
And to everyone tuning in, remember, knowledge is power. The more you understand about how the market works, the better equipped you'll be to weather these storms and come out stronger on the other side.
Couldn't agree more.
Until next time, happy investing, everyone.
Take care.